Welcome back to ET Now. You're watching Market Cafe with me, Kanishka Sarkar and Ankur Mishra. Well, while you're penciling in a muted start for the Indian market, it's time now to take a look at the stocks that you should be keeping on your radar today. Gaurav is standing by with just that list. Good morning, Gaurav.
Well, let's talk about Uno Minda. This stock is going to be in focus because board meeting is going to happen today where company will discuss about the fundraising. SBI is also in focus today because now board has approved raising around $3 billion via foreign currency. Coal India is in focus today because company has now clarified that the IPO of one of the wholly owned subsidiaries is in progress, and at the same time update will be followed as per regulations. Other than that, Ircon International is in focus today. When we talk about Ircon International, they have received an order worth 253 crore rupees from Western Railways. UBL is also in focus today because company is expanding its manufacturing facility in Andhra Pradesh. What they have done is that they have actually entered into a leasing agreement with one of the companies in Andhra Pradesh, which is Ilios Brewing, and with this they will be expanding their manufacturing facility. Other than that, there will be some stocks which will be in focus on the back of the set of numbers that they have reported for Q4 FY25. So first, let's talk about Whirlpool, Dixon Tech, Aster DM, Gabriel India and United Spirits. All these companies reported good set of numbers. On the other hand, we've got Fortis Healthcare and Torrent Pharma who reported inline set of numbers. And lastly, let's also focus on some of the companies like GFSC, JK Tyres, Finolex Chemicals. These companies actually reported weaker set of numbers if we compare it with the expectation that market had. So definitely watching out on all these counters on the back of the news flow as well as number that they have received that we have received today.
Stay with us because one important earnings coming today of IndusInd Bank. Remember, this stock has been in focus ever since it declared the discrepancy in the derivatives portfolio, and after that even MFI concerns did arise. So Gaurav, how much provisioning is happening in this quarter and what is the expectation?
Well, as when we talk about IndusInd Bank, it will be fair to say that IndusInd Bank is set to record one of the weakest quarters for the bank in the near future, because when we talk about the bank, we have already seen some of the discrepancies which will get hit in Q4 FY25. So first, let's talk about an impact of currency discrepancy, which will impact at around 1900 crore rupees in this quarter. Other than that, bank also said that there will be an impact of 600 crore rupees in their net interest income because of the wrongly attributed income that they had done in the 9-month FY25. And on the back of all these things, when we talk about expectations, now Street is expecting net interest income to go down almost by 11 to 12%. And on the other hand, when we talk about pre-provisional operating profit, there also we may see a fall of around 38% on a year-on-year basis. In fact, what Street is also penciling in is that the bank can actually report losses in this quarter, because when we look at these one-offs, these are going to impact the bank adversely. When we talk about the 600 crore impact that bank has recently discovered, what we can see is that if we include that in the net interest income, it can go as low as 27% on a year-on-year basis, and at the same time the same impact will follow in PPOP as well. In terms of advances and deposits, we are not expecting any kind of strong performance from the bank. In fact, what the Street is penciling in is that 6% growth is what we can see, but on a sequential basis, the numbers can remain flat. When we talk about deposit rate, there also we may see some kind of pressure. And as a result, when we talk about net interest margins, now they're expecting minimum impact of around 20 basis points. That is going to be adversely impacting the bank's net interest margins. And they also say that around 25 basis point of the NIMs are actually gone because of all the structural changes that we have seen in the bank. Let's also not forget that the CEO of the bank has also resigned because of all the discrepancies. So definitely, it is going to be a weak quarter for IndusInd Bank. What we are looking for is how the commentary is going to be in terms of deposits and advances growth, how the strategy of the bank is going to be, any kind of announcement that they have in terms of CEO and the management is going to be a crucial thing to watch out for. And lastly, any kind of outlook on net interest margins is also crucial thing to watch out for. But definitely watching out on the IndusInd Bank. But when we talk about Street, they are expecting weak set of numbers from the bank in this quarter.
All right, thank you, Gaurav, for that very detailed preview as far as IndusInd Bank Q4 numbers are concerned. Let's keep it with the earnings space. ONGC is also set to report its Q4 earnings. Now, revenue is expected to be flat on a sequential basis, whereas profit is expected to increase. Varun, what is the Street expecting this time?
Definitely. So, if you look at the overall results, there could be some operational miss, but yes, other income and tax benefits, that is something that would overall aid the profitability of ONGC. We are estimating the revenues to be flat around 33,700 crores. The EBITDA would decline by around 4.25%, and the EBITDA margins could actually decline from 56.25% to 53.9%. But yes, the profit is going to increase by around 7% to 8,810 crores. Now, the production that would decline by around For crude, it would decline by around 2% on a quarter-on-quarter basis, and for the gas, it would decline by around 5% on a quarter-on-quarter basis. Also, the sales volume, they are expected to be flat this quarter. If you look at the benchmark crude prices, they are down by around 8% on a quarter-on-quarter and YOY basis, and also the Singapore GRMs, they have fallen by around 58% on a YOY basis. So this actually signals that the overall realizations could be a little bit flat. The overall GRMs for ONGC, they could actually come down on a quarter-on-quarter basis. We will see how the ramp up the company does for the gas production and the oil production. That would be the key thing that you need to keep an eye on. But overall results, there would be an operational miss. Other income and tax benefits will actually aid the overall profit for this company.
Thank